India's October trade deficit, gold fever, and export blues. India's trade numbers for October came out, and honestly, they look like the plot of a dramatic movie. The country hit a record high goods trade deficit of $41.68 billion, way bigger than September's already huge $32.15 billion. So, what went wrong? Well, the biggest punch came from 50% US tariff that started in August. Since the US has been India's top export market for years, this tariff felt like a sudden plot twist. Because of it, India's exports fell by almost 12%, especially in sectors like textiles, garments, yarn, and engineering goods. These are all labor heavy industries, and the US is their main customer. No surprise that exports to the US dropped by 9% in October. But the real shocker, the massive import of gold and silver. Gold imports were 3 times higher, and silver imports went up 5 times compared to last year. This wasn't festive shopping. This was people trying to protect their money because the rupee weakened from 85.6 rupees per dollar in April to around 88.4 rupees in October. When currency gets shaky, people run to gold like it's their favorite comfort snack. Imports also increased because many companies preferred to buy cheaper foreign material instead of expensive domestic ones to stay competitive in global markets. The government isn't just watching from the sidelines, it has launched export promotion schemes worth 25,060 crore rupees, and the RBI has offered relief to exporters struggling with tariffs. Still, it's too early to say if this problem is temporary or part of a bigger long term shift. If India and the US quickly finalize their trade agreement, things might settle down. But even if the deficit stays high, the shift could eventually help India become less dependent on one major market. For now, the trade story is full of suspense. Stay tuned.